You're listening to The Real Investment Show.
So, Danny, I don't know about how you feel about this, but I feel like I'm getting ESG pressure. I feel like I'm getting environmental, social, and governance pressure. And not from clients, from our industry. Every advisory magazine I read, white papers, everything is to sell financial advisors on this ESG initiative. So I don't know if the whole industry is going off the green path or what they're doing, okay? The other day, I met with a client that manages a pretty large limited partnership. And she has an and one that manages a family foundation. And they're really upset about this whole ESG. Listen, if you want to do environmental, social governance, it's free country, okay? You know you're going to pay more money. You're going to pay more in fees. You may have less returns, but you're willing to give it up to make yourself feel good. Okay, if you know the facts before you go in, that's perfectly fine. So I suggested that these clients in their investment policy statements, if they feel that strong about ESG, because their advisors keep telling them that they have to get into these ESG funds, and I don't know why they have to get into these. I said, could the advisors give you a reason why you need to do it? Well, that's what's coming, and this is what it is. And I said, well, have you looked at expenses and all that? No, we don't get into they don't get into the details. They sell me the story of this. And I'm like, well, you might have to put in your investment policy statement that we do not want an ESG initiative. That might be a reality, Danny, for people that put together what we call investment policy statements, formal ways to invest, sort of the constitution of the investments, strategy and risk and liquidity. You might need to add a paragraph or an addendum to your investment policy statement saying no ESG. And then I got to thinking, what if I say that and I'm in a non-ESG investment vehicle? Am I still attached to ESG? So I'm reading a really good book right now. I'm reading a book by Vivek Ramaswamy's new book called Capitalist Punishment. And he talks about green smuggling. And what green smuggling is, and it makes sense, is I'm in an ESG fund, but I have asset managers that are going to proxy vote in favor of ESG initiatives. So this committee to Unleash Posterity examined 4,814 non-ESG branded funds, Danny, to see how proxy votes were cast on 50 of the most extreme ESG-oriented shareholder proposals from 2022. And again, this is from help from the Wall Street Journal. One proposal wanted Home Depot to perform a racial equity audit to identify adverse impact to non-white stakeholders. Also to Costco, also to ExxonMobil. So in other words, what green smuggling is, you think you're in a fund or an investment that's non-ESG, but they vote for ESG initiatives. So A grade, this company gave an A grade to companies that say if you're in a non-ESG fund and you want to be non-ESG, they don't proxy vote behind your back or green smuggle you by voting for those initiatives. Dimensional, Vanguard, T. Rowe Price, and Fidelity. That they respect savers and investors who have differing views on today's heated political debates. So Vanguard CEO Tim Buckley said, we don't believe that we should dictate company strategy. It would be hubris to presume that we know the right strategy for the thousands of companies that Vanguard invests with. See, Vanguard's smart, Danny, because they're saying we want those companies to do the best possible for their shareholders to gain returns. How much did Ford lose on EV vehicles?
Oh, is it an
Something
enormous
like
amount?
60 billion, or I can't remember the exact
No,
number.
it wasn't quite that much, but it was a lot of money. I mean, I think they're losing like the tune of almost $1 billion a quarter.
Okay.
It may have been like 500 million. It may not have been as bad. But either way, it's not a money-making proposition at the moment. But to your point, this is where a lot of these companies are, kind of behind your back, going out and pushing their political agenda versus pushing for companies to be profitable, to make you money. And what's really interesting about this is that these are companies that are managing money. So what other types of conflicts are associated with that? Because now they're going after, from a political standpoint, that may not make economic sense.
Well, I remember the activist shareholders that didn't want ExxonMobil to do oil and gas.
Yeah.
You remember that?
Okay, what would you like us to do?
We're going to have an ice cream shop. Here are the F- grades. 6 top 40 firms that backed more than 90% of ESG proposals. Northern Trust, Deutsche Bank, Goldman Sachs, Charles Schwab, UBS, Guggenheim, and BlackRock. Well, BlackRock got a C. So you may have to have or find these studies. So in other words, if you are a non-ESG investor and you want a company that's going to vote to do what they're supposed to do as a fiduciary duty to shareholders, you're going to have to dig deep because of this green smuggling, right?
Well, so is your money manager representing your best interest or their own? I think that's the important part, right? Especially when you get in with these big companies, what are the other conflicts associated with this? And you mentioned the ESG funds. There has been a humongous push. And I think what's so interesting about this conversation right now is that we're talking about not even the ESG funds, but the agenda behind the companies that are dealing with it in general.
Right, of a non-ESG.
Correct.
So believe me, this is not, we're not trying to make a political statement here. We're trying to help you understand is if this is how you feel and you want companies to do the best for you, and you put it in, because I'm having clients have to look at putting it in their investment policy. Understand your advisor may not really understand this.
But you may not be able to get around it either. Right?
Unless
if you're going to invest in funds.
Yeah, right. Unless you looking at these grades and digging deeper. Then you have to worry about what we call greenwashing. And Vivek's got an example in his book. So Goldman took an underperforming fund and rebranded it as an ESG fund. So they carefully constructed the divestment rules. It sounds impressive, but they didn't really change the holdings very much. But the firm charged higher fees. And all of a sudden, this fund got in all this new money. Because let's face it. Does Wall Street really care about the environment? Yeah, I'd probably do a little. But what they really care about is making fees. I know, I'm just trying to be polite.
Yeah.
But as an investor, you have beliefs, and your belief might be, I want ESG, that's all I want. If you want to do that, then you need to put that in your investment policy as well. But it'll be a lot easier to find the companies that do ESG, but you're going to pay more, and your returns will probably be less, depending on whatever industry or sector you're going to avoid.
But here's the thing. So if all these companies are doing and having to go through exactly you're talking about right now, like the greenwashing, that companies are getting pushed in a certain way.
Greenwashing, green smuggling.
Yeah, but do you really need an ESG fund at this point?
Huh?
Do you need an ESG fund? I mean, we know the fees are higher.
I'm going to say no.
They mirror the indexes quite a bit. You look at the ratings amongst companies.
But Danny, you might have a philosophy that makes you feel good. I only want it. In other words, we're always here to help the client.
Well, then go become a stock picker. If you want that, that's the only way around this, is to go out and to very actively, methodically go pick and choose the stocks that you want.
I still think that's probably the best way to do it.
Yeah.
But many investors don't.
Well, I think that when it's wrapped, it's in this pretty package with a nice bow and ribbon on it. Somebody's doing it for you. I mean, I get it. I understand, especially, look, most of our clients, they want to go live their lives. They're smart people. They've done really well with investing. But they're like, look, guys, we appreciate the philosophy you have. We want to go do the things we want to do, not manage money all day.
Right.
And so I get it. If you have that ESG agenda, you may want somebody who can tie that up in a pretty bow for you. But at what cost is that? And can you do it a better way? And if you don't want that, I think it's going to become more and more difficult to actually step around that fire, so to speak.
This ESG is an invasion like crabgrass. In other words, it's like your lawn is getting decimated. I mean, if you...
Oh, after all this rain down here, it's a big topic.
But the point is now everything is political. Everything.
Yeah.
I mean, if you go and buy a candy bar, I mean, down to the simplest things, it's exhausting. But as fiduciaries, I was starting to think about this. You got to help clients on both sides of this because that's what our job is. Our job is to help you hit your goals. We don't worry about your political opinion. We treat you and want you to hit your goals. But if you have this penchant where you say, I don't want ESG, or I do want ESG, well, keep in mind, there's a lot of intersection. And there's a lot more in fees that you're going to pay and perhaps underperformance, but you're willing to put your money where your mouth is, and that's fine. And if you're non-ESG, you're going to have to dig real deep because of something called green smuggling. It ain't easy being green. That was a terrible Kermit impression. When we get back here at...
What's Kermit? And you may need to retire for a while.
Don't rub it in, man. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.